three GST rates approved by the GST Council on 3rd September 2025, which is set to bring a big, huge change to the Indian economy and the situation for business, consumers, and many others. So it looks simple, right? Just three rates: 5, 18, and 40%. So 5 and 18% would be for the regular goods and services. 40% would be for the sin goods, the very much luxury goods that would be classified. And what is going to be abolished? The two rates, which would be the rates of 12% and the rate of 28%. Now, in this, we need to consider many factors. It's not just one single factor that is enough to be studied for this change of GST rate. The many factors that need to be considered that have changed because of this decision of our finance minister Nirmala Sitharaman and her team. We need to understand the consumer perspective. That means which goods are going to be cheaper, which are going to be more dearer, and so on. At the same time, we also need to understand the perspective of why government has made this change suddenly. I mean, after 8 years, suddenly out of nowhere, it has come up with these two rates of GST, and everything is going to be amended, and so soon. 3rd September they announce, and they are approving, and it's going to start around 22nd of September. So why this hurried decision was taken by the government? What was the situation which prompted the government? Was it the Trump tariff? Was it the economic slowdown? What is it exactly? We're going to see. Then we will also look at the perspective from the angle or the effects on the economy. And finally, we are going to deal with some questions that will be in the minds of business owners, how this GST rate is going to affect them, what will be the problems with respect to invoicing, with respect to stock of goods, and so on. Of course, the government is trying to tell you that because of this GST rate change, what is going to happen is simplification in the tax structure. So ease of doing business is going to be better. They're also talking about lower prices. In many cases, consumer goods, electronics, and other such things would be coming to you at a cheaper rate. It is also talking about less compliance burden on the business owners. Also, they're talking about a term which we are going to discuss in the later part of this video, which is called as consumption-led economic growth. So let us see the first perspective, that is the consumer's perspective in terms of this change that has happened in the GST rate structure. So consumers, we all know as consumers that this particular GST rate structure is applicable from the date of 22nd of September 2025. Now, what is going to be cheaper? Now, everyone is interested in knowing what is cheaper, where the rate has become 5% now, or it has gone down even to 0%, no tax, no GST on it. So there are many products which have come in the 5% slab, like milk and milk products. Dry fruits are there. Then we also have sugars and confectionery, so all the attractive items. Snacks and bhujiyas, the chips and other such snacks are all coming under the classification of 5%. Now, if you look at these products, if a product is costing, let's say, even 100 rupees, earlier it was 12 rupees of tax, and now you are getting it at maybe 5%. So 5 rupees of tax. So you're going to save on each packet an amount of 7 rupees. So this is what the valuation change will happen in case of these goods. Now, of course, this is said to be targeted to the middle class, but does it target the middle class? The answer would be not really. It is catering to other people, like even if you talk about rural areas, people who don't have that amount of, you can say, income. These people, yes, 7 rupees would matter to them, and they may start consuming these products. So a larger, you can say, base of consumers is being targeted with the help of a lower tax rate on such products. Another part is where there are essentials and which are very important for the economic growth. These type of products are also coming under the lower tax regime now of 5%, which is like agricultural goods. There are many medical equipments, medical goods also, which are coming in this particular tax rate of 5%. Then there are educational services, certain products like books, and even the learning aids, the learning help that you can get online or offline or whatever. So different areas of agriculture, health, and education are being targeted by keeping the rate at 5% instead of the earlier 18% or maybe sometimes 12%. Now, there are also people who are enthusiastic about shopping. Now, of course, our Prime Minister Narendra Modi had said that it would be the GST rate cut would be like a Diwali gift to the people. So why did he say that? It's basically because you are going to get the benefit in shopping. So what do you shop normally during Diwali? You will shop for products like clothing, you will shop for shoes, apparels. There could be like festive season soaps and shampoos and certain other things. Some people also go in for the purchase of TVs, televisions, dishwashers, washing machines, and so on. So all these products are brought into the ambit of 18% of taxes instead of 28%. So a 10% difference in the product price, which is quite good enough for savings for different classes, is something which the government has given as a benefit in terms of GST rate cut to consumers. Now, one important thing which people also buy during festive season is cars. Now, another important announcement for the small cars. So, people who want to buy a car which is less than 1200 cc's in terms of petrol, or 1500 cc's, less than 1500 cc's in terms of diesel cars, or bikes which are lower than 350 cc, all these will now come in the ambit of 18% taxes instead of 28%, which is again another 10% of benefit on these products. However, if you are buying cars or buying bikes above this particular range, like cars, petrol cars above 1200 cc's, diesel cars above 1500 cc, or bikes which are having 350 plus cc's, then you will definitely have to pay a higher tax, because now you come in the category of luxury good purchase, and you may have to pay the taxes of nearly 40% on these goods. Most consumers also were not very happy with the rates that were levied on health and life insurance. So government has taken care of that, and these two services like health insurance and life insurance are coming now under the exempt category instead of 18%. So no GST on these. So that's a relief for the people who are buying insurance products. People who are enthusiastic about travel. Now, most people who travel do not have accommodations which are costing more than 7,500. So, a big range of people, or you can say the number of travelers, if you have to count, a higher percentage of these travelers has hotel bookings, room bookings, accommodations of less than 7,500. So, for these people, it is a big relief, because from the earlier 12% rate, now the rate comes down to 5%. Of course, the hotel owners will not have the benefit of input tax credit on this. Now, coming to the second part, that is the government perspective, which is equally important to be understood in terms of this GST rate cut. Why did the government take a sudden decision? Now, there is a post of the earlier finance minister, P. Chidambaram, was actually the one who had introduced the concept of GST in India. He has posted on X saying that it is too late. That means 8 years, you are 8 years late in keeping this type of a tax structure, which we had announced earlier. So the Congress-led government, you can say, had announced this particular GST earlier on, and they had also had a very simplified tax structure of two rates and a very high rate for goods which are luxury items, sin goods, and so on. But now he has questioned on X a number of things. Why did the government really cut this particular GST at this point of time? What was the reason behind this? Is it sluggish growth? Is it rising household debt? Is it falling household savings? Is it falling household savings? Or is it elections in Bihar? Or it's the Trump tariffs which have triggered the government to take steps towards the GST rate cut? Or is it all of the above? So this is what he has written on X, and it is quite relevant to the current situation of the government's decision. So if we have to see the government's perspective, the main reason, of course, for the quick decision making and the quick implementation of this was because of the Trump tariffs. So 50% levy of tariffs on India by the Trump administration is a very big setback for our industry because of a number of reasons. And of course, one of the reasons would be the exports would become more costlier. If we have to export the goods, it will be costly, and which means our manufacturers will face issues with the production and with the sale of these goods. So what happens? If we are not able to export the goods, what the government decided now, let us consume the same goods within our own economy. So instead of exporting, instead of making business out of India, let's make the same goods available to the Indian people, and these will be sold out in India. But how to encourage people to actually consume these goods in India? The first thing they did was they cut down the direct taxes, like they have reduced on the income taxes. First thing they did, and this has left the normal middle class people with a higher rate of higher amount in their hand, which they actually would have normally paid in the terms of taxes. So now you have a little bit of more savings. Now, what you'll do with this saving? You will be encouraged to spend this saving to boost your own economy. So this is why the GST was cut. So one hand they have given you money, and the other hand now they are encouraging you to spend it in terms of not in terms of expenditure, not in terms of investment, but in terms of expenses like consumption goods. This is where the term consumption based economic growth stems from. So basically, you're encouraged to consume the goods. So once you consume the goods, what happens? It's an automatic booster for the economy, isn't it? So if you buy more goods, the manufacturers will be making more goods. When the making happens, obvious effect is the GDP of the country would rise. So Indian GDP would rise. The target of whatever that trillion economy goal is there, that could be achieved if you consume more goods. So encouragement is given to people to whatever the amount they have in hand should be actually spent out. This is can we really say this is a good sign? Because what is happening earlier, the government was more focused on capex growth. Capex growth means capital expenditure, where we are more focused on building of infrastructure projects, roads, dams, then tunnels, other infrastructure areas. So this was the main focus. Even capex growth in terms of industries like machineries, having more and more production with the help of boosting of more plant, like you can say having a bigger plant established with good machineries, with other things. Then now the shift has come from this infrastructure growth, capex growth, to literally just consumption growth. That means you consume more, consumers are paid salaries, from the salaries they save money because they don't pay much tax, and from this again they spend money to keep the economy running. So spending and saving and spending and saving, this will keep going on, and in a way industries will keep running. This is how now the government plans to operate our economy. Is it good or is it bad? That the time will decide, but right now it doesn't look like a very good sign, because consumption based economies do not survive the long run. Another impact that this GST rate cut is will be on the revenue of the government. Direct impact on the revenue will be like around a 48,000 crore of loss. The next perspective now we're focusing on is the economic perspective. Now, how does economic perspective differ? Here, basically, you will find different industries benefiting because of the booster, consumption-based booster that the government has given. So which would be the industries which will have a boost? It will be the food industry, the automobile industry. You will have the industries like electronics, which will have the benefit of people buying them. Construction also will have a booster because a number of services and a number of goods have been brought down from 12, 18 to basically 5%. Now, this can trigger long term growth, as I mentioned earlier. You will have more money in your hand because you don't pay taxes or you pay less taxes. This money, again, you use for the purpose of spending because you have a lower rate of GST. So, you are tempted to buy goods. When you buy goods, automatically the industries will be boosted, and industrial boosting will lead to the GDP growth. So, this is how the economy will keep running in the long run, if at all people really spend and people really move towards the actual purchase of the goods, if they have the spare money in hand after meeting up with the basic requirements. Finally, coming to the last part of our video, which is the business perspective. Now, here I'm going to answer a few questions that people may have in their mind, like business owners may be facing difficulties in understanding certain things about how this GST rate change will impact them. The first thing, of course, they have to remember that they have to start changing the invoicing process, the e-way bills, the invoices, the various softwares that they may have. They have to update everything to the rates which are going to happen from 22nd of September 2025. So they have to be ready for that particular change. Now, question comes to certain people. One question that they have is, if they have already supplied some goods or services before 22nd of September, but the invoice has been raised after 22nd September, then what should be the rate? So this is a big question that people may have in their mind. So some have their ongoing contracts, some people have services which are midway, some people may have goods in transit. So how will this actually impact? The thing is that the act very clearly has stated, where they say that you have to take into consideration the time when you're actually receiving the goods or the invoice, whatever is earlier. So if you raised an invoice before 22nd of September, you have no issues because the rates will be the old rates. But if you have received the payment before 22nd September and raised the invoice after 22nd of September, so what is happening? You have received payment earlier, invoice has been raised later, then you will have the old rates. If you have received payment of that goods of those goods or services which have been actually supplied prior to 22nd of September, you have received this payment after 22nd of September, then new rates will prevail because you have not invoiced that particular supply, and so your new rate will be after 22nd of September, when we actually raise the invoice at the new rate of GST, and you receive the payment after 22nd of September. So two things are happening. Invoice is also raised and payment is also received after 22nd of September. Then new rates will prevail. Second thing people have in mind is that, okay, I already had purchases and I bought them at an old rate. Maybe I bought it at 28%. Now I have input tax credit lying in hand at the old rate. Now what to do? Can I avail this particular benefit, or is it gone now? Has the input tax credit lapsed because of the rate change? No, your input tax credit will not lapse. If it is lying in your credit ledger earlier to this particular time zone, then there is no issue. You can keep claiming this input tax credit ahead also, because there is no such restriction in the act. Of course, you have to fulfill the input tax credit requirements. Nothing of an impact of this GST rate change, but normal requirements of input tax credit have to be satisfied. Another question that comes to people's mind is, I have a stock in hand at the rate of 28%, let's say, and now I'm going to supply it after 22nd of September at the rate of maybe 18%. Now what? So the question here is that, will I sell that particular product at 28% or 18%? The answer is simple. The time in which you are supplying the product, the invoice is being raised after 22nd September, the payment is received after 22nd September, then new rate is prevailing. Finally, do I need to cancel the e-way? Finally, we have the e-way bill thing. If you have raised an e-way bill on, let's say, 21st of September, the goods are in transit, they reach the destination, the customer on 23rd of September, then should I cancel the e-way bill, raise a new e-way bill at the required rate, or what is it? The answer is no. The e-way bill can be raised at the old rate, continue it, and let it be. When the product reaches the final customer or consumer, whatever the case is, what you need to do now is raise the invoice at what rate, at whatever the rate prevalent on the time of supply, and at the same time you will have to take the payment after 22nd of September. So the time frame is very important, and you will need to study each and every case carefully. You can take the advice of your financial consultants for this purpose, so that there is no confusion if you have such kind of issues in your business. So hope this video on GST will help you to understand how the rate changes are actually going to be applied. And I've also put a link in the description box below, so that you can go on the actual classification of goods where the rate changes have happened. So whatever the notification has been given by the department, the rate changes that have happened, that has been put in the link. So that can be useful for classification in terms if your goods are coming under any of these types, or any of these, if your goods are or services are coming under any of these types, it can help you to do the classification. So if you have not joined this journey of Commerce Gyan, where we are sharing such interesting things, do subscribe to our channel, and hope to see you in the next video of Commerce Gyan. Thank you.